Banks are fairly straightforward because they're the banks that, do the loans in those cities. Typically, they're going to be pretty well known. But if you're looking for private money, which most times when you're starting out, you probably are, at least for some component of your deals, those are really a lot of word of mouth.
All right, so let's get started. Welcome, everyone. Welcome back to the Scale Nation podcast. I'm here again with my hosts, Zach and Carl. And today we have our guest, Judy Walsh. I'm saying that name correct, right? I'm really bad with names, so I want to make sure I'm not butchering anything.
No, you're good. You're good. Yep.
Yeah,
Well,
awesome. Yeah, Judy is also a real estate operator, and she's investing in Cleveland, if I remember correctly, right?
I
Cleveland.
am. It's a new market for me.
New market. What markets have you been in before?
Mostly Rhode Island up until now, and a tiny bit of Massachusetts just recently.
It was better than me. I was wasted 2 years in Miami. Everyone keeps telling me I try to make it work, man. Because it's like my back door. I was so adamant in making it work, and then everyone's
Hmm.
like, "You wasted 2 years, bro." I was like, "Don't tell me that, man. Don't tell
Are
me
you
that."
Never
originally from
wasted
that
if you
area, Judy?
learned. I'm sorry?
Sorry, what
Are
was
you
that?
originally from the New England area?
I am. I live in Massachusetts, actually. Yeah. So the house I'm renting out here actually is my primary residence, and I moved into a smaller rental. So sort
Oh
of a
wow.
modified house hack. And then the other properties were in Rhode Island, mostly URI students, one multifamily in Providence itself, just traditional duplex. But the other ones were single family, long-term flips, I call them. I kind of added a bedroom to each one, renovated them, rented them to students, and then Airbnb in the summer, and kept them each for a few years, 5 or 6 years.
How many units you have in total?
So now I'm down to just having my single family, which is like embarrassing and
Ah.
ridiculous.
Well, how did that
But I'm like
happen?
restarting, right? So the whole getting into a new market, there's so many things that take time, like building the relationships. I've had several trips out to Cleveland. I've met multiple agents, multiple contractors, multiple lenders, new lenders has been really the journey for me in terms of dictating what you can actually close on, because I've had a few
Hmm.
things in contract or close to contract, and it came down to what lenders are willing to do based on your resume. So it's really interesting when you've done the small multi going into the larger multi, you need to have that resume, but you can't really get that resume without having it, right? So
Isn't that
now I'm
crazy?
building.
Yeah,
It is crazy. So either
it's
I partner with someone, which could happen, or I'm really just working on duplex by duplex by duplex now to get the doors and work my way up to from 2 to 6 to 10 to 20. So that's my journey for this year. Now that I know that was the journey, I should have really, I mean, that you can always just start with those, but you really have to. It's not really about
yeah.
wanting to, it's about you really have to, because being newer to it, you also have to really focus more with private lending in a new market when you don't have a resume for the 10, 20, 18s, unless you're partnering with somebody who does, you're going to be looking at private money because the banks want to see a resume. And
Yeah.
that's going to come from, I guess, a portfolio of twos, threes, and fours and sixes, which is fine. It's just interesting because I wish I had really understood the necessity of that about a year ago rather than the thought process that, oh, if you can manage a duplex easily, start with that. I thought that was more, the thought process, but you really kind of need it. Like you kind of need to build sequentially for the purposes of going into the more traditional loans later, which are obviously better rates.
That's a lesson
So
I think I'm learning
I
as
kind of
well.
spent some
hmm
time, I
I'm
spent
learning
some
a
time
lot.
negotiating things
Yeah.
I shouldn't have.
And that's
I,
one thing
I,
I can say. The one thing I can say too is like going through the process of, the deal that we're working on currently with Sal, seeing how, you know, thank God for Zach, because Zach knows so much. Because
thank
if
God
it
for
wasn't for
Zach.
Zach, I don't know if I would have found my way into this as early. I would have got there eventually. It would have just been much more prolonged.
Oh yeah, and then for me as well. So I was, like I said, looking for units in Miami for a long time, thinking that I could just jump into large multifamily, and then every single time it's like, no, this doesn't work, or I can't lend to you on this, and you need to find a key principal. A key principal, everyone knows that key principal is someone that can hold the note for you because you don't have the background to do it yourself.
Mhm.
So all these things I just didn't know. until I was like, okay, let me just get the duplex. Even now that I'm working on the deal with Zach, I still want a duplex. I still want a team of like a portfolio of duplexes before I even start to go higher and higher. That way I can make mistakes on the small units and
Mhm.
then learn that to scale bigger, right? All we hear is scale nation.
Yep.
Yeah, you don't
Agreed.
feel the mistakes as easily on the single family or the duplexes as you do of low occupancy on a larger one. But the thing you
Right.
got to worry about too is on the duplexes, if you're at 50% occupancy, you only have 1 out of 2 units rented.
Mhm.
Right.
There's
Right.
less give when you're talking, you know, that large of a discrepancy when you're talking ratio to 1 2 units. So I found it was a game changer for me once I reached over 10 units.
Really.
There's a lot
Hmm.
I
less
can see
worry
that
about
for like
occupancy.
efficiencies of your systems. Like you had more efficient systems then. And when did you start using like whether it's Buildium or whatever platform you're using? When did you start with that? At what
So
level?
we got Buildium this year when we acquired the 48 unit at Grace Valley. But before that, I was using a software called TurboTenant.
Okay.
Yep.
Yeah.
And that was nice and it was convenient. It is a software for self-managing owners, so they don't have the integrations for multiple owners like Buildium or AppFolio does.
Hmm.
Mhm. Interesting.
Yeah, that's software that I actually took a look into. And TurboTenant's not sponsoring us, but I do like the software. It's actually pretty
hmm
good. It's really good for learning. And then from what I heard, it scales into Buildium quite nicely.
Yeah,
Yeah,
and that's
if
You don't
if
you
they
can
had
scale into it.
offered anything for property managers with multiple owners options, I would have stuck with TurboTenant. They
Oh,
don't.
and
that's a good.
this is actually the third person that I know that uses Buildium because I when I did property management and like renovations for this lady, she whenever her father passed away, she inherited like 16 like single family residentials, and so I mean she owed nothing on them because they were already essentially paid off, but there was also he had some stipulations that when he passed away, there was money that he set aside that would essentially pay those off, so she didn't have to worry about them going into foreclosure.
Hmm.
But it took me a little bit to learn Buildium. Buildium is it's a little bit difficult, but it's only difficult because you just don't know where to look for stuff. Once you
Mhm.
know where to look, it's very straightforward.
What about
Yeah, that's
TurboTenant,
good.
Zach? Is TurboTenant as difficult as Buildium, or is it a little bit easier?
No, it was fairly easy once you understood just the software and where to go for what. It was. Although I just actually had a meeting this morning with another investor and property manager, and he did the transition from Buildium to AppFolio, same as Walter did, and he's pushing
Mhm.
me to do that because apparently that AppFolio is a lot more user friendly.
Are you in the
It
100
seemed
units
like
yet?
from the demo, it had a lot of features that are really nice. And, because Walter demoed it last week, I think, and it really looked like it had a lot more features. And I think, his recommendation was at a certain number of units. I want to say it might have been up to 100. But I could be
After
making
100,
that.
yeah. After
Yeah.
100,
Yeah.
he said it makes more sense.
Yeah.
Yeah.
Yeah. So I am going to launch right into Buildium, even with these duplexes, because I just
Oh,
want to have the
nice.
systems ready so that as I scale up, I don't have to switch. So I just started um, the subscription. I'm learning it now, and I'm closing on one of the duplexes later this month, and the other one is still TBD based on multiple factors.
Awesome.
But
Oh,
it's
congratulations.
just thank
Congrats.
you. It's like after a year of offers, negotiating, coming close, and then having it all come down to again, it's the lender relationship. I feel like is probably the most important one that I probably needed to be focusing on more so than even the agent relationship and the contractor relationships be coming
Hmm.
to a new market because I felt so much like I know how to manage a rehab really efficiently. I know how to, build my team, oversee, move quickly. I had worked with a private lender before with the draw schedule. I was like, I know I can manage this. I thought I could easily manage it with like several units rather than just two. I wasn't looking to do 50, but I was like, I know I could do an 11 or an 18. And I had some
Right.
things in play, feeling confident that I could do it. It was more that I didn't realize that funding it was going to be the issue in terms of, again, the resume. So, and partnering, is definitely an option, but it's finding that individual who is going to be the person that you really can partner with and work well with. And that's just a selection that I think you can't take lightly. So I'm closer there with establishing that because I think that will really obviously help all around. But But again, like I would have gone more aggressively on the smaller ones sooner had I really realized it. And I also would have focused twice as much on the lender relationships with specificity because they all say they can do all these things until you're actually in the process of applying. And then they're like, oh, but wait, no, we actually can't. So,
That
that's
happened to
where I
us.
wish I had told myself a year ago, ask very specific questions as if you were closing next week.
Yeah, yeah. When
Because,
I was
those
buying the
relationships.
48 unit at Grace, I talked to dozens of lenders. And the biggest thing that I found was they say they do multifamily. Great. How many units? 48 units. Oh, we can't go that big.
Mhm.
We can
Okay.
go we can go 2 to 4 units. And I'm like, that's residential. That's not commercial multifamily. Like, be more specific on your advertising, be more specific on your conversations. Like, I can get all
Mhm.
the way through the conversation and tell them how many units there are. I think, oh, we can't do that.
Yeah. I mean, I was leading with the units and all the things I thought you needed and all of the projections of what I was going to do and the rents were and what I thought the occupancy would be afterwards. I did all those calculations and felt pretty confident, but then it came down and I told them the experience that I had verbally, but once you send it in and they vet like how many doors do you have right now. Well, I liquidated what I had so that I could move
Yeah.
over and do this and some lending. So currently I have just like the single family that I moved out of because I'm working to acquire in a new market. So on
Right.
paper now I look like, I mean, yes, I have experience, but it's not owning as many
Yeah.
doors as they want me to be owning
Yeah,
right
we should
now to qualify
always
for
keep updating your SREO. I mean,
it. Hmm.
it should always be a section too about which ones you've owned and sold and what was your profit on them because they count that as
I have
exposure
it,
as
all of
well.
it. They just
Yeah,
wanted it to be current. They wanted me to be already owning
really.
doors now, not just the ones I sold, which was something I didn't expect because I was really specific on it. It had the section of what I used to own and what I do own now. So that was a learning for me. I wasn't expecting that to be as difficult as it was, but it
And
is
for those who don't
interesting.
know, Zach, what's a SREO?
Schedule of real estate owned.
Oh, okay.
Yeah,
I
so
didn't
they
know that.
typically want to know what you've owned, how much you bought it for, when, how many units, what improvements you may have made, and if you sold it, what your profit was, that sort of thing. And if you still own it, what the rents are, what the NOI, any operating details that you can provide, because they want to see your experience and they want to see
Interesting.
a resume of doors and can you manage, if you've only been managing a certain number of doors, they want to have faith that you or the partner you bring in can operate this because they want it to succeed or else they are at risk as well.
Mhm.
That's true.
Very true.
Oh, well, we just had to fill a PFS that had all that information.
Yeah, I was
The
just about to
personal
say that.
financial statement. Yeah, yeah,
Mhm.
yeah.
It
They
was like
requested all that
schedule this,
information.
schedule that, and I'm like, okay, so some of my boxes are blank. Is that okay?
Yeah.
I said,
Yeah.
Zach, I said, dude, I don't have anything in these boxes. He said, but do you have anything in the debt mortgage box? I said, no. And he goes,
No, yeah. Yeah,
and
you
it
gotta.
was one of those things where it's like, I feel like it would be an issue if you had a lot of outstanding debt with your mortgages and everything, and you
Hmm.
weren't bringing in enough to essentially cover that. Because I'd ask what you have. It was crazy. That paperwork, it took me a little bit to figure out because I had to look through everything to
Yeah,
find it to make
it
sure it
was
was
the
accurate.
application for Dominion Financial. This is
Okay.
what
Right.
we're using for
Dominion
the
does large
lender.
multifamily, right?
Say that
Yeah.
again?
Dominion does large multifamily.
Hmm. Yeah,
Commercial.
they closed on my 48.
Okay, okay, okay.
Yeah, but yeah, so
I'm trying to think of the
we
one
had to get
you.
them approved individually with Dominion, and the questions I received from Carl.
Concerning.
Hey, at least I'm transparent. I
It's
told her this is
okay.
how it is. I said, am I SOL or am I okay? So, but you know,
I had to reassure them that I could close this deal myself with my experience and everything. So as far as getting them qualified with Dominion, it's quite easy because I'm also on the loan.
it's good. And
Right,
you're
Right.
already currently doing one through them that's going well. So it's
right.
like I feel like they're starting to see that you're vetted. You're getting to that point where it's like no matter what you put your hands to or touch, you're not going to touch something that's going to lose money. So
Well, I
or
also
that's
just
the
closed
hope
on a
at
single
least.
family home with them as well, a single family burr with them. And that was a seamless process. It was I feel really easy because I was already in their system approved.
Mhm.
Hmm.
Yeah, I
That's
think
good to
that
know.
first one, that first establishing the relationship with the
Hmm.
lender and having them see that you can do this and be responsible and timely and profitable and manage it and you know what you're doing. And then I feel like after that, the second, third, fourth would be much easier. Even with the private lenders, like I feel like I could go do more in Rhode Island right now because I have those relationships, and I feel like they know me. They're like, oh yeah, she'll have the draw schedule on time. It'll all be done quickly and efficiently and, profitably. But because these people are new to me and I'm new to them, it is just, I mean, I don't know if you felt that too, Zach, when you got to a newer market or if this is, something that
Yeah. I mean, I
depends on
would
the market.
buy previously. I used to buy only 45 minutes radius from my house uh,
Lucky.
because I wanted to be able to drive to the unit and fix it myself.
Mm-hmm.
Well, you can't do that if you have to go 45 minutes north and 45 minutes south. I found to be an issue. And then you can't do that. It's not scalable. So once I hit
No.
17 units, I was strung out by myself doing all this. Then I had to bring in people, and it's a lot of who you build your relationships with, and how they work with you and you work with them.
Mm-hmm.
There's definitely that relationship. You need that strong relationship with the lender, with the broker, with anybody that you want to get these deals from.
100%. And I think the distance thing actually worked in my favor. I feel my properties were an hour and 45 from me, and I had no intention of doing all the physical work
Hmm.
myself because I just wasn't going to.
Mhm.
So I got a really reliable handyman, and I was able to find an electrician and a plumber who would actually call me back. And beyond that, I just managed it all via, I mean, they're students, so we had a group text chat. Like that was how we communicated.
Oh, that's
And I
cool.
was like, listen, I need to know if anything related to water is a problem. You see anything dripping, you call me 3 o'clock in the morning, doesn't matter, and we'll get it fixed. And we worked that way. It was just kind of that sort of thing. And you can do that at a small scale, right?
Yes.
But that's the same thing, now I need not just that type of person, but I need several of them and ideally probably a property manager at some point. These first couple I will manage myself. Like I will be out there for the most part in the beginning until they're renovated and leased up. I'll be out there like 90% of the time. And then I would like to identify a property manager that is responsive and responsible and is going to, embrace the philosophy that I want to use. I feel like just getting them to call me back in this market has been tricky. So I'm like, if you're not calling me
Wow.
back, you're not calling a tenant back. So I haven't
Well,
found
Yeah,
one
that's
that I
that's
trust.
a
that's a
big
good
thing for
resume right
everybody, like
there.
communication. It's a big thing.
Oh, yeah.
Yeah, it is. I mean, and property managers can make or break you. So
Mhm.
I'm not ready to just jump in with anybody.
That, and they need to have systems in place too. If they
Hmm.
if they don't have systems in place and they're trying to do it all themselves, how many units can they physically manage themselves if they don't have systems?
Yeah.
I had
Exactly.
to bring on a VA. So it's not just me, it's me, Nikki, and my VA who does all the management and tenant communication. And then I have Carl doing the maintenance and running that. So it's a team you build that rather than, trying to do it all yourself.
Hmm.
And this is also simultaneously while we have a full contracting business that's doing house calls. So it's not like we just and that's the thing. We had 3 employees with us, and then we had to downsize just because we were to the point where we were trying to bite off more than we could chew. It was like we were trying to do too much with too many people, and obviously everybody needs paid. And it was the point of not necessarily running out of funds, but also at the same time just we had to allocate the money to where it needs to go, to like get things done so that way everybody's happy, especially the lender. And that's why bringing up lender, relations, how important they are. I'm starting to see that once you get that relationship built, everything's pretty smooth if you do your research.
Yeah. Another thing too is there are some lenders. I mean, a lot of lenders that I've dealt with are brokers, but there are some that still work for private banks, and it's nice. You can reach out to them at any time, some depending on who they are. But I've actually been out to eat to lunch a few times with different lenders, um, just to get that relationship started. Have that conversation. What do you offer? What products do you have? how does your bank work? How does what do you have in place that can benefit me, and how can I benefit you? And I've done it a few times with multiple different lenders. And just before I left the office today on the way home, I sent a quick text out to two different lenders that I know. I'm like, hey, I have I have 3 properties, 9 units, valued at 425. I want to pull 80,000 cash out. I got 200,000, print lent against them, and they both texted me back like it was 7 o'clock at night, going, yeah, well, we have this rate, or I can run prices for you. And that relationship is crazy because I got pricing and I got all the information I need on who to choose and what lender I want to go to pull my cash out refi on the properties I got going.
Now, how do you find these lenders? Because you talk about, you should have the relationship with the lenders, but how do you even start that relationship in general? How do you know who to go to? How do you find them usually?
So my biggest thing would be reach out to real estate agents.
Really?
Reach out to your agent, reach out to a broker, and say, hey, do you have any lenders that can do this? Because as an agent, we have a network of lenders because we run into so many other situations. We run into people who choose their own lender, and we have to work with them, for that deal. We build relationships that way. So if you reach out to an agent and say, hey, I want to do this, do you have anybody? Majority of the time, they're going to have someone that can do that.
That's very true. And I mean, if you're working with wholesalers, same thing, the best wholesalers will actually suggest a lender that you can use, especially if you're looking for private lending. Banks are fairly straightforward because they're the banks that, do the loans in those cities. Typically, they're going to be pretty well known. But if you're looking for private money, which most times when you're starting out, you probably are, at least for some component of your deals, those are really a lot of word of mouth. And a lot of it is sort of trial and error too, of like having those conversations and seeing what they really offer versus what someone might have thought that they offer. And, private and hard money is such a learning curve too, as far as asking the right questions, knowing what to ask, and not knowing what, you don't know what you don't know in the beginning. So when someone says they can fund the whole deal and the renovation, right, as long as both of those numbers are, like, say, 70% of the after repair value or ARV, that's great. But a lot of times, then you still want to know what's my out of pocket cost, because they're going to want you to do something, whether it's pay the closing costs or maybe put down the down payment and then you get something back. And the renovation funds are always on a draw, which means that you're typically going to be putting some money out for that first week's worth or 2 weeks worth of renovation, and then you're going to be reimbursed for it. So those are the things that when you hear, oh, they're going to cover 100% of it, it doesn't mean that it's not anything coming out of your pocket.
It doesn't
so you
mean
have to
that they're
really
going to
be
give it
careful
all to
with
you
the
right there at
verbiage.
closing, so you can, do that.
100%.
Yeah,
Yeah, so
exactly.
that's deceiving. If you've not worked with it before, you've really got to realize there's a lot of specific questions to ask, and not just the rate, but how many points do they charge up front? What is their draw schedule? How do they manage it? How do they disperse the funds? I worked with one lender that actually mailed checks
Oh,
versus,
wow.
yeah, or like had checks that I could print. They would send me secure checks that I could print, and then I would deposit them. So it's not instantaneous. In other words, when you are moving funds around, you have to be ready for those types of things, and managing the flow of money in and out, so that you're not just assuming that it's all, covered. And then the timing and being ahead of, like, when am I going to need that next draw, and what am I going to have to show you in order to make sure that you feel like enough work has been done. So usually, like, the work schedule, I break it down by the day and what should be done by what day. And really, I'm having conversations even with this new lender about at what point, how soon, how frequently will you do draws? Because I'm looking to get this done in 3 weeks. So if you're going to do a draw schedule, it's going to be like weekly, because this is how fast it's going to move. And if some people are used to working with managing, owners who are going to maybe take 2 or 3 months to get a project done, they might be expecting a slower roll on the draw schedule. So these are all things that you kind of learn over time, and questions that are really good to ask if you're working with private lenders.
That was a lot of
Yeah, I think,
information. Wow.
yeah,
Yeah,
I think this is a
absolutely
good
too.
segue
I
to
mean,
our other
I've gone to
Absolutely.
multiple banks just to learn how they do lending. When I first started, I used a lot of small town local banks. So I'd be like, okay, I'm gonna go to this bank for this deal. Can they do it? They did it. I like that. All right. This deal's different. I'm gonna go over here, see what happens. And so now I use specific banks for specific lending, needs. Because one bank does something this way, and I know I'll get more, lent to me from the other bank because they appraise differently or they ask different questions.
Yeah, that's a
And
good
some
segue
will
to our other
do,
topic.
an actual appraisal, but like some of the private lenders might take, a realtor's opinion, a written realtor's opinion rather than, a full appraisal. So that's a question to ask too, because they're not all the same.
Yeah. Yeah. One bank I use, have a commercial department. So no matter what it is, whether it's a single family unit, all the way up to whatever, they're going to appraise it commercial because it's not primary residence or secondary or whatever. So I have a duplex that they appraised it based on income potential, which means the value came in a lot lower than the other bank who went and appraised it on the refi, traditional, comparables. So that value
Mhm.
came in a lot higher. So that's why I'll use different banks now because I know what they ask for in appraisal.
Yeah,
That's very
that's a
cool.
really good distinction too for anybody who's kind of newer and going from the smaller, up to four is residential, and then after that, you're going into commercial. But that's a really good point because there's a lot of factors that come into play when you're looking at those smaller multifamilies. I feel like with the 2 and 3 family units, because they are valued based on comps, it's very different. So it kind of helps you out in a way if you've got vacancy and you wouldn't want it to be valued based on the NOI if it's vacant. But at the same time, you're also competing with a different pool of buyers because you might have some owner occupied buyers who are willing to pay more and willing to, overpay from an investor's perspective for that same
Yeah.
piece of property. Once you get into, I think, the mid-size multi, it's probably less of that because most people aren't buying an 8 to 10 unit thinking they're going to live in one of them. So that was something I found kind of interesting in
Yeah.
shopping for these deals.
Yeah, in the Pittsburgh market, you see a lot of twos, threes, and fours selling at like 100, 120 per unit. When I just purchased 48 units for 35,000 a unit. So
Wow.
you're definitely in a different buyer market for those units because you do have the owner occupied possibility. You're marketing to different buyers at that point. So when I look at
Oh,
single families, duplexes to 4 units, I'm looking at definitely a 1% or 2% rule. If it doesn't meet those requirements, I don't even go any further. And then I look for how long it's been sitting on the market. Has it been almost a year? Because in the real estate world, if it's been listed for a year, it's going to be the contract's going to expire for the agent. So it's either I can call them up and get a lower price, or I can try to pick up that listing myself and talk with the actual owner. But then a lot of owners too are really unrealistic. I was actually having a conversation with one of my
Mhm.
agents in my
oh man.
brokerage about a 15 unit that she picked up. Then they're getting it listed, and the owner of that 15 units wants $1.5 million in a small rural town where your cap rate is, I mean, 10 to 11%. So she's asking 100,000 a unit when in all reality it should be more 45. That
Yeah,
is
that's
that
crazy.
is the world of
But
most
there's
real estate agents where you're like, I suggest this price, and they go, no, I want this price. And it's like, okay.
I mean, we had the same issue with some of the large multis we're looking at with one of our brokers that was not realistic at all. He even laughed at me when I offered a price because he was like, "That's too low, bro." I was like, "Yeah, but it only works at that. I don't know how you getting your number." I literally asked, "Show me how you're doing it because how I'm doing it doesn't make any sense." And he's like, "Yeah, but I guess you just it doesn't work for you at that price or whatever."
I
Yeah.
feel like a lot of times when I've had such a gap, and I'd make the offers anyway, it seemed as
I
though
do.
the number they were at was the number it would be at once you stabilize it. I'm like, okay, you're at
Exactly.
50%
Yeah,
occupancy.
exactly.
You need, 100 grand in renovation. There's no, you're asking for the stabilized value, but I'm going to do the stabilizing. That doesn't work, and I
Right.
think that there's a lot of that. There's
Yeah,
a
I've
lot of
seen
that
a
out
lot of
there.
that based the price off the pro forma,
Mm-hmm.
and it's unrealistic.
Yep, you
But
see
the
it a lot.
conversation I had this morning with my investor friend, we had a conversation about exactly that. The commercial real estate brokers who price things high and then come back at us investors saying, well, you're coming in too low. That's unrealistic, or that's not what this market, you're not following the market trends. And we had that conversation, and what we came down to is that agent doesn't want to lose that 15 grand in commission, that 30 grand in
Oh,
commission based on price. That's
They also don't want to lose the listing. They feel
Mhm.
like maybe they'll get it together at some other number, but if the seller's not going to list with them, if they don't take, take their price,
Exactly.
I do
Yep.
feel like sometimes you can tell when the listing agent is frustrated because they know it's too high, and some have disclosed to me that they probably shouldn't, that they feel like, I really feel like this is where it should be. This is, and it's amazing to me. But I think, in the name of getting some sort of deal together, there's a lot of conversations that go back and forth. And I think it must be difficult to be in the position to work with some of these sellers as their agent and try to talk sense into them. I mean, I was an agent a long time ago in the residential space, and similarly, you have the sellers who are just unrealistic and have their wish price. But usually you can get to the motivation of, do you really want to sell this? Do you really want to sell this, or do you want to hang on to it? And are you just sort of fishing to see if you get your price, or are you really motivated to sell it? And some people really need to sell, like with the commercial loans, they have to refinance at a certain period of time. And that's when they really are kind of under pressure to sell, and they have to potentially move a little bit off their number. But yeah, it's interesting psychology when it comes to the seller and broker relationship, because I do wonder what conversations I'm not hearing, as they precede the showing, because you're like, you have to know this number is way off. You have to know. And they have to
Yeah.
try to talk what they think is sense into you. But when the per unit cost is double what it should be, the math is the math.
yeah.
Exactly. And that's the
The
kind of
numbers
conversation
don't
I had
lie.
with my other agent, that has this 15 unit coming to market. I'm like, that's too high. And she's like, I thought so. What do you suggest the price to be? And I'm like, 860 at like the top. And she's like, well, she wants 1.5. That's unrealistic, and it's going to sit there forever. But
Hmm.
but then I do my research, and I find that same seller recently sold another property at a loss. I'm wondering
Mm.
if she had to get rid of it, if there was some other issues. So maybe she feels hurt or scorned by that transaction.
Hmm.
And now
Yeah, it
she's
could
trying
be
to make
trying to
up the
make up
difference.
for
Yep.
it, you
Yeah.
know.
Well, here's the question though. So if they come in too high and it sits on the market for a year, couldn't that be detrimental to them and actually cause them not to get to 860 and
It
cause them to have to
absolutely
settle?
is. It's
Hmm.
it's it's harder to get it hurts the listing more if it's listed too high than it is if it's listed too low, because the market always dictates the price. And if it's listed too low, then you can come in and have multiple offers, and you can ask for highest and best, and then you get something similar to what you want, or more realistic price to compared to the market. But if you list it too high, no one's going to touch it. They see it and go, never mind.
Hmm.
I had an
Yeah.
OM hit my email this morning at 10 units for, 1.2 and unrealistic prices for the area. And I read the OM and I deleted the email.
Hmm.
Like, I'm not even going to try, because my offer would be half of what they're asking.
I hear you. I know, but I feel
I've
like
seen
too, if
those.
you are going to throw those offers out more to get the conversation going with the agent, I mean, following up eventually if they really want to sell it, they eventually have to
Mhm.
come down. Like there's a few sellers I'm following up with, like on a monthly basis through the agent, and if their listings expire, I'll go directly to the seller. But one had 40 units and it was 38% occupied, and it was just all management. It wasn't like the property needed a lot. It was just management wise, and they were losing money every year. And I said, well,
Oof.
if they really want to stop losing money, they can sell it and they will have something in their pocket. And then another one that just was again, losing money, but they had over improved it. They had bought it too high, and they were trying to recoup what they put into it, which was never going to happen. So that question was, well, do you want to take the loss in 2025 or 2026? Because you're not going to get that price. It's
Yep.
just, it's always good to get the backstory of why are they at that number and what did they put into it. And if, the agent may or may not tell you, but some things you can find just by searching. You can search to see what they purchased for it online. That's public, obviously. There are ways to find out what they owe on it, depending on different softwares you may have access to. But, the more you can get them to tell you, sometimes they're proud of how much they put into it. So you can get the agent to tell you how much they put into it. And then you can figure out how much they're into it for and why they're, not looking at your number. But a lot of times your number is going to represent a loss for them. And,
Yeah.
if they really want to sell, they might have to take it.
Right. Let us segue into our other topic that I want to discuss, using other people's money, as how Walter says OPM. When I went to the meetup and he said OPM, I was like, "What's that?" But he made a real zinger of pointing that out, that I was the only one in the group that didn't know what that was. But yeah, we covered the topic a little bit here. We covered using lenders, right? Lenders are willing to do 100% down and 100% refi, which is something I thought was impossible until Zach's told me he had one that can do that. But what other type of OPM have you guys actually have privy to or used before in the past?
Well,
For
so, obviously
me,
there's the bank, when
yeah,
you
okay,
go
that's
to the
one.
bank. I know that for my first property, I had a family member provide the down payment. So there's that. When you're looking at, you can sometimes work with maybe someone who wants to invest but doesn't really want to deal with the hassle of it, but they want to maybe privately lend you the money, someone that may be out of their 401k or out of, let's say, a home equity line that they have that they just want to get a better return, to allow you to maybe borrow that down payment and then use a loan from the bank for the rest, depending on the size. And then there's the the hard money lenders, the other type of private lenders where they may not know you personally, but they're going to um, want to invest in the property, whether it's a percentage of the purchase cost and the full renovation, or some of them will do the full of both. But you do end up having to put some in, like I said, up front. It's never just 100% covered
Yes.
without anything out of pocket for you.
Yes, I always keep telling people that, yeah, we always hear those coach calls with those like advertisements. Do you want to buy something with no money down, another thing that you need to put work in? And I was like, that doesn't make much sense, because every time I'm looking at it, even with other people's money, it's still a lot of work. There's still a lot of things to even to get to that level to where they trust you enough to give you that 100% down, 100% refi, right? So I don't know where that mindset came from, or I guess it's really good advertising. But it's
Yeah, a
bad,
lot of them
man.
will cover those things if like the purchase price is low enough that when you add the purchase price plus the renovation, it's like 70% of the after repair value, for example. Like some of them will do more. But again, you're going to be out of pocket for at least the initial closing costs, the initial phase of renovation, because they're going to give you that money in stages when they see the work is actually being done. They're not just going to hand you a big check on the closing day and
Right.
you just run off and do whatever you want. That's not how it works.
Yep, they need to verify. And depending on the lender too, depending on if it's a small time lender, one person who lent his private funds, he might want to walk the property with you before every draw. Um, but then, Dominion, when they do draws, I put in for a draw request, and then they send an inspector out to take dozens of pictures of all the work that's been done. And then they
Really?
individually go through each picture and look at what's been done and determine how much of a draw they're actually going to approve.
That's a great point, and it's another great question to ask up front, because you not only want to know the draw schedule, but you want to know what's going to be required
Mhm.
and what increments would they expect to see and provide some replenishment, right? Like, do they want to see pictures? Do they want to walk it themselves? And I do my lender that I use the most in Rhode Island is one who actually walks the property before you purchase it, but then would just like photos and videos for the updates before they release the next draw. So that's definitely something that every lender might be a little bit different as to what they require. It's great if they'll do photos. One tip make sure you get photos all along the way, because if they're doing electrical work and then they're putting the sheetrock back up and somebody forgot to get the pictures before the sheetrock went back up and you really, or plumbing and now it's covered, you don't want to have to take that down to get those pictures for the
Yeah.
inspections and for the draw. So those are things that you can imagine. How do I know, right?
Yeah.
Only happens one time, and then you don't let it happen again.
Yep.
Like the one day
Yeah.
I wasn't there, nobody took a picture.
And know your city or town requirements too, because depending on what you have to do with the rehab depends on how much permitting they're requiring. So if
Yeah.
you have different permitting, then they're going to want to come see it every so often, different stages of the permit.
I have to ask you guys, have you guys used any of the big banks like Chase, Bank of America, or anything to purchase real estate properties in the past?
I have not.
I have not
Really?
either. I mean,
Really?
primary residence, one, but not investment properties.
Is there a reason why you tend to avoid these big guys?
It
Or is
comes down
just
to the
that,
relationship.
really?
Yeah.
Yeah, like I mean, in my area, I don't have a Chase or a Bank of America around me. I went to PNC for an inquiry on a
I
real
remember
estate
that.
loan, and I didn't like that person's answers, so they lost my business there.
Wow.
Yeah, I can call any of my lenders. The banks I can call it during office hours at any point in time, and they'll pick up. But any of my lenders, I can reach out to them at any point in time and get a response. And then that goes down to the relationship, I think.
Okay.
Because
Okay.
I know if I call Marion Center Bank, I know Joe's gonna pick the phone up. If it's not Joe, I'm gonna get Joe to call me back, right? I know if I call In First Bank, I actually have the cell phone number of my commercial lender, and I can email her and say, I want to do this, let's do this, and she'll give me a response. If it's a large loan, and it's a smaller bank, so they actually have to get multiple large loans approved. If it's too much of an approval, she'll actually just like, try to go to the board to get it approved through them.
Wow. Wow, that's interesting. And you, Judy, you said you never use the big guys either.
No, I mean, I haven't really had to. So I'm trying to think. The first smaller ones I did were mortgage brokers that I worked with, and they just had the best loan products. And when it came to the more recent, like the flips, those were all with just private money, just because I knew it was going to be fast turnaround. It was faster to fund and close and faster to, get it deployed. So it was just less of an approval process. So it became a speed thing when it got to that level of project.
I think
Just
I understand that.
faster to move, faster to get to the closing. Um, Maybe slightly less documentation, not a lot less, but definitely moved faster. You can close faster, and you can make a better offer if you're making a close offer,
Yeah, I like how you brought that
typically.
up because I don't like jumping through hoops. So
Mhm.
I'm being honest. I'm
No
saying
idea.
if you make it harder for me to do, I'm gonna go somewhere else that makes it easy.
Mhm.
That's
It's
good
just
idea.
unnecessary added stress. It's like why do I need all this extra stuff on my plate
Yep.
mentally?
That makes a lot of sense. I had a question, but I lost my train of thoughts when you started talking about hoops.
Well, so like to that point with the relationships and the private lenders, if you know someone really well and you've done multiple projects with them, just like Zach's saying, like I can message someone that I've worked with multiple times and say, these are the numbers on this property. Can you get me a proof of funds letter before I even make the offer? Then I make the offer and I can say, I can close in 14 days. Here are my proof of funds. Now, my number might not be as high as the next guy, but it might just be better terms, and therefore you can move more quickly and you might get the deal. But that comes down again to the relationship with the lender. And if you don't have that, and you have to know that they can actually meet that timeline, or else you're the one who kind of is in a situation where you promise something you couldn't do. So you've got to be really sure they can do the timeline. I usually add a little bit to it. But I mean, that's again, the lender is such the pivotal point, unless you're doing this, even if you're doing the first deal or two, like with your own money, eventually you're going to run out. And this is all about scaling, right? You
Right,
can't use
right.
your own money forever. If you want to scale, you have to use other people's money. That's the only way to do it.
Yeah,
I have to
find those
ask,
people who don't
this is
want to
the
be plunging toilets and fixing, houses that they have to manage. Find the people that
yeah.
want true passive income and get them to lend to you.
Hmm.
Now, this is for me the king of other people's money, the king and the one that stands at the pinnacle of OPM is seller financing. Have you guys ever got any deals seller financed?
So I
I have
negotiated.
not.
No, you
Yeah.
have not. Okay.
No,
Yeah, so I
I have a
negotiated a
story
deal.
about.
It was a 50-unit storage unit facility that I negotiated a deal, and the seller was going to come with half seller financing.
Really?
Yep. Yeah, I didn't close it just because of the nature of the property, and there were no other banks that wanted to touch it.
Wow. Is there a reason why?
So the nature of the storage facility was movable, like pack rat containers. So they were not permanent storage units. They
Oh, I
were
think I
stacked
noticed.
in rows,
That's interesting.
Like pods.
like
Like
pods.
pods.
Exactly. Yep.
Pods. Okay.
Containers.
Was it
Yeah.
was it pods?
U-Haul box. U-Haul has them now. They ship a box and you can put it anywhere, and then you just
Right.
padlock it, and it has a weaterproof cover.
Was it
And it's just
pods?
literally a plywood box.
Were
Yeah.
you buying pods?
It was a brand called Boxable, or no,
Oh, okay.
Boxwell. Boxwell was the
The
brand.
Boxwell.
Boxwell. Okay.
That they had on. I had 50 of them. And it was producing, it was good, and I was like, okay, I'll give you your price, just you give me 50% seller financing. And the only reason it fell through was because there was no banks, private, large, small town
Really?
banks that wanted to touch it because there was no
Yep,
tangible
and
asset
that's
attached to the ground.
That
now
makes
that's
sense.
interesting
Wait,
though
was it
because seller
was it on land?
finance. Sorry, go ahead.
Yeah, was it on land? Did they not own real estate to hold those
The
boxes?
land was owned.
But they weren't like stationary objects. They were movable. It's like buying
Oh.
a trailer park home, essentially.
What were you gonna say,
Interesting.
Judy?
Well, so with the seller financing negotiations that I've had, none of which have come together, it did come down to the lenders don't really want to be involved um, with seller financing in the deal. Now, how some more seasoned investors have worked around this, I have recently learned, is that if the seller will work with you to keep that portion of the financing sort of out of the initial deal and you close first and then have the paperwork around their section of the loan, because some of the banks definitely don't want to be involved with a seller financing deal. But even some of the private lenders get a little funny about it. They don't want to have somebody else in second position. So it would need to be handled as a promissory note and not recorded until after the closing. And these are all like legit things you can do. It's just a matter of how you manage it. The other way that some people have done it is to have somebody let you partner with them on the operating agreement, sort of almost buy into the LLC that owns the property,
Right.
manage it with them, have a promissory note to them for that portion of the deal, and then do it as a refinance, and then they can come off the operating agreement. Now, I've had conversations about entertaining those avenues with a few sellers via their agent, and I think some agents are more comfortable than others in how this works. But I also think that sellers are a little bit nervous about anything that's non-traditional. And even though they might say, I'll finance this part, you just have to get a loan for the rest. If it's going to be a traditional loan, banks really don't want to see that. They're not comfortable with it. So I have not yet
Interesting.
successfully done one, but I have committed to getting really good at negotiating this. So hopefully I'll come back to you at some point in the future and say that
Oh
I've
yeah, I
done it.
would love to hear that.
Their fear
Yeah.
is they don't want the property to be over leveraged.
Exactly.
That makes sense. That makes sense.
But in
Would you?
theory, neither do we. So the numbers ideally should
Have to
work if
work.
we're doing it, even with that seller financing. So
Exactly. For
it
us,
should be fun.
we can look at the ARV, or we can buy with equity. But as far as the bank or the lender is concerned, the value of that property at the time of purchase is the purchase price. So if you're buying a property for 1 million and the ARV is 2, and you get 100% between your lender and seller financing of the $1 million, they still don't want to see that because they in their mind that value is $1 million until you close and then go back and get an appraisal.
Would you guys ever do seller financing? Like if someone came up to you to purchase one of your properties, let's say 5 years from now,
Mhm.
would you be like, oh, okay,
I've done it.
I can seller finance that. Oh, really?
Yeah, I did a full seller
How did it
financing
turn out?
on my fourplex,
Right.
and then he couldn't make the payment, so I took it back and then sold it
Nice.
again.
Was it
See?
100% or was it 100% seller
Yep.
financing? How did you structure for that, did you have a down payment involved? Did it, what was the
So I had a
amortization
down
schedule
payment. It was
like?
like $2,000 down payment down on the property. Everything else came, through it, principal and interest payments. Um, yeah, and we recorded a promissory note. We recorded a mortgage and a promissory note, but I just took it back when he couldn't make payments. He luckily knew he couldn't make payments, knew he was struggling, so he gave it back right away, like instead of me having to go through the foreclosure, which was convenient.
Wow.
Um,
Hmm.
but yeah, I've done it, and then I would do it again.
Do you have that property still, or did you sell it
I
again
sold that
after
one
that?
to another investor. Yep.
Nice.
Yep.
Nice.
I would definitely do it. I would definitely do
Yeah.
it.
I'm thinking
Um,
about doing it too. If I start buying duplexes, one of my exit strategies is probably going to be seller
Yeah.
financing.
I have a duplex
and
listed
I feel
right
like
now. I'm trying to sell, and if anyone walks up to me and says I want to buy it, but do you do seller financing? Yeah, absolutely. Let's do it. Let's talk about it.
it's great.
No, you put it
I
out there
have
in the air,
this
people.
vision, this like dream of like having a tenant move into one of my duplexes that would, just really wants to own their own home, really ends up
Mhm.
loving living there, and like can eventually could make the payments and could be somebody that I could sell or finance for them and help them own something.
Oh,
I feel like that would be a really good feeling around the disposition as well as, being the bank. But of course, you have to vet the person and make sure that they can make the payments and all the
I
things.
mean,
And to that point, you have to be willing to take it back if it doesn't go well.
Right.
you should look
So
into rent to own then, Judy.
Eh,
That's something that's very popular. A lot
Different
of people like doing
nuances.
that.
it's
Different
Yeah, different
nuances
definitely
for
different.
sure.
nuances.
I looked in the rent to own. I would rather have that mortgage against it because rent to own, they can just walk away at any point in time, and you really have no recourse.
Oh, interesting.
Yeah. I
Yeah.
mean, it's
Interesting.
it's
It's
just a
great if
lease.
you, yeah, it's just a lease. It doesn't really benefit the owner.
You can't structure it to a way to be beneficial to the owner for RTO?
It depends on how you do structure it. If you talk about if you structure it to where your mortgage, taxes, and insurance are covered, but because you still own the property, those things are still in your name. So if they're covered, you're getting that amount of money in payments plus interest. But if you want to get those expenses out of your I guess out of your budget, and you just want this all on the new owner, all you're responsible for at that point would be receiving payment of principal interest and recording the payment and the reduction in principal that they accrue every month. Um,
Hmm.
but it's a little bit more paperwork for rent to own. It's a little bit more verifying that they, are paying you, that you then are paying your insurance company or your property
Right, right, right.
taxes. I've done it in a way like,
Oh, so you've done this before.
yeah, I've done it in a way where the owner or I would say the renter was responsible for having insurance on the property. Um, but I still couldn't have them responsible for taxes. I had to still pay those. But the bank then required me to also make sure that I had insurance.
On the property. Wow.
So it just wasn't it was just easier to then find somebody who wanted to sell or finance a property and record a mortgage.
That's that's very cool. Would you ever sell a property up front and say open to seller finance? Or would you wait for someone to come to you with that option?
Depends on the market.
Okay, okay.
Because I think the like any of my listings that I have currently of my own properties, I don't advertise that option because it's a duplex. So I'm looking at the market of owner occupied or other starting out investors. And my duplex is listed at 80 grand. So you're talking 40,000 a unit. It's great for any new investor because it already cash flows.
Hmm.
And the thing with advertising the seller finance right off the bat on the listing would be the general public doesn't know the differences,
That makes
right?
sense.
So
That
I'm
True.
going
makes
to get
sense.
inundated with questions of do you rent to own?
Hmm.
Oh, okay. I get what you mean. Yeah,
It's
yeah,
true.
yeah,
I think
yeah.
especially for the smaller multi, because you're going to have the people, wanting to move in versus, again, I think for the larger commercial, I do see it on some commercial listing,
Mhm.
you know, the 10 and up. I've seen it on some of the listings, and again, that's just in the Cleveland market. But I don't know if it varies market to market how much you see it either, how prevalent it is.
Yeah, and it depends on, again, the network of investors. Like, we as investors can understand seller financing versus rent to own. We know that if a seller of a 10-unit building offering seller financing, they're only going to, be offering a certain percentage, and we'll have to go find the rest of the funds. Majority of them aren't going to
Right.
offer 100%. So Judy, question for you though is, as we end this, what does Scale Nation mean to you?
So when I hear Scale Nation, I just think about our journey to scale up our real estate portfolio, and the nation part is pretty cool because it makes me think that really you do have to look at whatever area of the nation is the best place to be right now. Like, you have to be open to any market in the nation that makes sense at the time, and not be
Miami.
stuck with, I'm going to get myself to drive there and fix it myself. You got to get that out of your head and be
Yep.
ready to go anywhere. And again, just then build your team. And I think it's great that you guys have this going. I think that if you look at all of your potential investments with the idea of how could I scale this, you'll make different decisions. And I think that's what it's all about. That's what it came to for me, and being long distance in the beginning was really helpful for me to get that in my mind. So now I'm not afraid to be long distance, but building that team and being present enough in the beginning, and then being able to kind of wean your way back once you trust folks, I think is the key. But I think, to your point, that this is perfectly named. You want to scale, you have to consider the whole nation because the markets that are great now might be very different 5 years from now.
Yep.
Yeah, hopefully
Everything's changing, everything's dynamic. Absolutely.
We'll see. I'll keep that out. I'll keep it in like the window. I can see the outside. Yeah.
Well, Judy, really appreciate you coming on. Great conversation. Hopefully we can
Thank you
have
for
you on
having me.
again.
Thank you so
Amazing.
much
Thanks for having me.
spending
Appreciate
the
you
time
guys.
to be on this.
Yeah, for sure.
Have a great, I wish you a great 2026 with lots of success, and I can't wait to see how many units you end the year with. Stabilized units. You're doing a
we'll
great
be back.
job.
We'll invite you back. We'll be like, okay, so
Yeah.
January, December. Let's see what we did.
All right. There we go.
See how we scaled.
All right, everyone. Have a good night.